What is up, guys, and welcome back to the channel, Trading with LTJ. And in today's video, I pretty much just want to go over two of my favorite chart patterns, what they look like and how to trade them, right? The first one is going to be the double bottom pattern, right? I actually just love to see that chart pattern. There's different ways to trade it. And between the examples that I have pulled up, I kind of want to just show you a difference. And then the other pattern would be the double top pattern, right? So what is up, guys, and welcome back to the channel, Trading with LTJ. In today's video, I pretty much just want to go over two of my favorite chart patterns, what they look like and how to trade them, okay? So the first one would actually be the double bottom pattern. And I will show you how that pattern looks like just a standard W, right? And then the second pattern would be the double top pattern. And what that pattern looks like, just like a capital M, right? So I'm gonna share my screen real quick. We're going to get straight into the video. Cool. Okay. So guys, when it comes to this double top pattern, right? If we're just looking at this picture here, this black line will represent price and what price is doing, pretty much the candlesticks. And this stop means pretty much my stop loss, right? The entry is when I would want to enter in my trade. And then the target is the target profit, the take profit level, right? The neckline is typically like a level of where price will retrace to, like a past resistance or a past support, right? But if we're looking at the double top, it's going to be, you have the level of support and resistance that you need to pay attention to. So, but when it comes to the entry, you're looking at the past level of support, right? So as price came back down here, we look to make the entry and get to the target, right? Now, when it comes to the double bottom, right? Imagine this is still the price. This black line is price, right? As it makes this W, like I spoke of. We have our stop loss. We have our neckline where we would typically like to enter the trade. And as you can see, even the entry is slightly above this neckline because that's not exactly where you want to enter within the trade, right? There's going to be a level of candlesticks that you need to understand as well that could possibly send this trade in an area of consolidation. But most of the time, price would just usually like come up and then come back down to retest this level to make sure that this is the correct entry and that we're actually looking for the buys now. And then once price does that, you can see that we're looking to get the target profit back up here. So I'm gonna show you what this looks like with the candlesticks now. So for the double bottom, again, look, we have price coming down. Price met at this zone here, whether this was a area of support based on previous trades, based on the market previously. And then it came back up to resist this level here. It came back down, had another area of support. So now we're recognizing that once this candle closes, it's like, okay, there's the moves that could be made here. But after seeing the way this candle here engulfed this candle, you can kind of take into consideration that like, okay, something should be coming out of this, right? So once price got back up to here, we know that price has decisions to be made, and then it could either retrace and then go up, or price can retrace and come down, right? So, price could either reverse and then come down. But so yeah, as price reaches this neckline, this is when we would actually want to enter our trade because it's just a much more clear setup rather than entering too early and then we're getting caught in a lot of drawback. That's not what we want. So for this double top pattern, we can see how price was coming up. It met a zone, met a level up here, probably an area of past resistance on a downtrend, right? It came down. We had a retest here, came back up, retested this level again based off of here. Now we understand that, okay, it's selling. So when should I make my entry? Yes, an entry could have been made up here, but it's more suitable to wait because as price retraces here, we don't know what it could do, right? Based off of this candle here, we've seen a lot of buyers settle the momentum. So as as the news sent price down here, we get to this neckline again, right? This is when we want to make our entry after the close of this candle, because it's now we're knowing that we're in a seller's market again. You put your lot size up and you trade. So now that I've shown you what these patterns look like, I'm gonna go over to my chart and we're gonna see what it looks like in action for real. Okay. All right, bet. So forgive my mess, but I'm gonna take this Fibonacci retracement off real quick so y'all can see what I was talking about. All right. So we have our double bottom. Never mind this red line, right? And guys, something that you got to understand is that these colors can be changed, right? So although like these are red and green candles, but my candles are black and white over here, it's still just black and white. Like it's literally just the same movements. You just got to pay attention that the colors are different. Okay. So you see how price sold, retested the level, came up. Oh, sorry, price sold, got to a level, retested a level, came back down to retest that level, then came up, boom, right? Price came down, it came back up. We had another drop. This is that neckline I was talking about, right? This is that neckline. This is the neckline. This is that neckline I was talking about. You see how price came up as it got back to this price came all the way up here and dropped, right? So this is when we would typically want to enter the trade once price breaks here. And look, this is still a good amount of pips. You probably would have got 39 to 40 pips out of that, right? If we're doing $10 per pip, that's $390. If you're doing $1 per pip, $39. If you're doing 10 cents per pip, it's $3.90. So you can see how this can be quick math, quick money. Yeah, you just have to understand what you're doing and have to have patience because it'll eat you up if you know that. And I've been there, like, right, I've placed I've like had good setups and I entered too early or may have entered too late and I missed my opportunity. So your timing has to be impeccable. Guys, chart patterns won't always go the same way every time, right? You just have to have the ability to recognize what price is doing, how price is moving prior to some setups, and just be patient, right? So not every time will you recognize that a double pattern is coming, but it's just the fact of like being patient and waiting for price to maybe set up for a double bottom, right? So although this is the dollar index and I'm doing my analysis on it, keep in mind, guys, like to know these currency pairs, you have to understand that like you got to know what the strength of one currency is doing, right? So since I typically take trades with like using the US dollar, I'm going to read my dollar index to understand how the dollar is moving according to other pairs, right? So after I make my markups on a dollar index, I would then be able to have a better bias as to what the dollar will be doing against the Euro USD or the USD to the Japanese yen or the Great Britain pound, right? And so on and so forth. So let's just get back into it. We have some type of example of a double bottom. Not very perfect, but once you start to be able to like identify these things, you can understand that like this could be considered a double bottom, right, guys? So if we're looking at another example here, I'm not sure if you can actually see it like I can, but I'm gonna draw it out for you. We have the down, the retest, the come down again, the retest up here, and then boom, this could have been your first entry, whether it's been this candle or even just took some trades here on this candle, right? Yeah, guys. So as prices get made back here to this neckline, your first entry could have either been made here or here, just based on whenever you feel more comfortable placing the trade. Let me try to find a double top for you. Yeah, guys, here. Got another example of the double bottom. Price came down, came up, came back down, came up. This is that neckline. And we up for a few pips. Okay. Looking at double tops. Here we go, right here. So now let's get into a double top pattern right here, guys. All right. So we can see how price came up, came back down to test this level, came up again, got back down here, right? So remember how I said price can come back down, retrace, and then we would probably have to make another entry, right? So if you didn't even place an entry, you're good, because it's like you can make your better entry, right? So price still did its little double top, right? We have our neckline. So just say if we did place the trade here, we've been out of profit for a little bit as price retrace, and then boom, we still headed in the seller's direction, right? So typically what happens is when you get a double bottom, you're looking to make buys. When you get a double top, you're looking to make sells, right? For example, double bottom, boom, 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 double bottom. We in for the buy after the break of that neckline, right? We kind of got another example of a double top here. You can see our price came up, it came back down to touch this previous zone, came up again, came back down, right? So this would have been considered our neckline. So even if we would have just been out of profit for a little while, price retrace and then continued in the seller's direction still. So we would have been in profit for that one. And again, guys, you just have to be patient enough to make sure your setup is correct. But then if your setup is being tested, it's like that's where the fear disappears, because your level of patience was good enough to be able to sit and wait for price to get to a certain level where you know that this will happen. This will more than likely happen, right? Ain't nothing guaranteed, but it's just a level of discipline of understanding that, that these typical patterns, these things are guaranteed, instead of like it's a guaranteed and profit trade right then and there. But if you're doing what you're supposed to with waiting and seeing like guaranteed setups, then your trade can be guaranteed. So yeah, guys. So one example I want to show y'all real quick before I wrap this up. Double bottom patterns don't always typically happen at the bottom of downtrends, but I'm gonna just give you a little brain teaser just to like be able to train the eyes a little bit, right? So as we can see here, price came down, it came up to an area, tested it, didn't break through, right? Came back down again, got back up to this area, and then this will be my neckline, and then I'm placing the entry. I'm placing the entry like this. Like, yeah, I'm just placing the entry up here, placing my stop below it. And that is not even good parameters, but I'm gonna place it here anyways. I probably place it at this. I probably would have placed treatment. So guys, real quick, one more example that I want to give y'all before I wrap this up. It's another double bottom example. And I just want to show you how price doesn't have to typically be at the bottom of a chart for you to get these double bottoms. It's just a matter of recognizing how price has reached double bottoms within a certain time frame and knowing to how to trade within there, right? So we got this one right here. Price was still in this uptrend, right? As price came down here, it came up to this level again, tested it, retraced back to that same level, right? And made a reversal. As it got close to this level, this 200 EMA as well, which is this thick black line, it it had to do it had a decision to be made right within the market, because once it gets to this point here, a lot of fluctuation goes on between price. And if I was to zoom in a little bit, you can see how there was just confusion, right? So what I mean by confusion is the smaller these candles, um, areas where price is just moving sideways instead of linearly, like up and down. That's confusion, right? Confusion. A lot of these wicks show confusion. So once price got back up to this neckline and broke through, we could either enter for a safer trade here and caught as many pips as we can up here, or we could have just entered right directly as soon as price crossed. Because if we're making our entry on the 2-hour, you could see that price broke through and was in a rally of strength. So once that candle closes, we had another 1-2 candles to fucking enter on. So I really hope that helps. I just wanted to give y'all some understanding and show you some examples of what a trade would look like. For me, I'm gonna go into a currency pair now. Right, so yeah, double bottom again right here, sell, come up, sell again, retest, come up, test this level, price broke through, caught pips. Double bottom right here, sell, come up, test the level, come back down, retest this previous level here, break through this line, we up. It's just as simple as that. Like, and it's like it happens so often. Like, you just have to be paying attention for the shit. Like right here, sell, come up, test level, sell again, come up. Now, once price broke through here, depending on the news, that's what sent that pair up like that so much, because of either some bad news against the dollar or some good news for the euro. But right, so here we go, guys. Here goes a really good example of a double top pattern here with one of my previous trades. So back in March, we had price just made this beautiful double top pattern for me here. And yeah, I actually didn't execute the trade here. I had placed one earlier that did well for me. And I think I may have caught some pips here once I recognized that, like, okay, this should finna just probably double top. So yeah, price had came up, so tested the level, came back all the way up here. Matter of fact, let me redo that. Right. So as price came all the way up to this level here, this zone, it came back down, tested there, came back up to retest that previous high. As price broke down and got to here, right? We had the M formation, the capital M. We can see how now could have been a good time to enter the trade, right? If we would have entered the trade just off the close of this candle here, right? That still could have been 37, 40, 50 pips, right? And that's 54 pips, right? If we're risking $10 a pip, that's $540 over what, 2, 4, 6, 8. Yeah, like another 8-hour shift, whatever you want to call it. But money is money. And if you're saving it, if you're spending it right, it's going to stack up. So yeah, guys. Let me see how I'm gonna close this out. Okay, guys. So yeah, if we're just looking at this example here, right? This is a previous trade back in March, around March 1st to March 7th. The trade didn't take that long to complete, but the setup did, right? It took about a good week of no trading for me to actually recognize. Well, I placed a trade previously here, and then I placed a trade here, but it was just the fact of waiting for the double bottom to set up to go ahead and get two more positive setups. Oh well, one and then a loser here, but I don't even think I placed both of these. I think I just stuck with this setup and got what I could get. Right. But if we're just looking at this example here, we have price getting back up. We have price coming up and testing this area here. It sold. Price came back up to retest this area again. We sell. So after price got back down here, right? After price broke past this zone here, or even just my neckline, this is where I would have entered the trade. This is where I would have made my first entry here, probably this candle after the close of this one. So guys, that could have still been, let's see, 46 pips over 14 hours, 50 pips over 14 hours, right? You know what I'm saying? Just, it's like 2 shifts for $500. Yeah, guys. So after price closed here, and if I would have just even just made this entry here kind of late according to what the trade did, but just the level of discipline that it takes to become better at this. Once price closed here, I would have just entered in for this trade for 50 pips. Maybe not even that long. I probably would have closed earlier because that would have still been 14 hours. But if I would have just decided to wait only like 4 to 6 hours, 36 pips, that's still a good trade, depending on what you look for in a day. And again, this is a 2-hour time frame, so there could have been multiple moves within this trade alone that could have got you much more money or much more pips. So I think as people start to learn this and grow into this space, the mindset and the idea of capitalizing and making money every single time you place a trade has to go away in order to truly be profitable here. Because if that's all you're looking for, you can go watch cars. Sorry, but I don't know. It's just, this actually takes a skill set. It takes discipline. It takes patience. It takes like mastering your emotions, and it's a process that even I'm still mastering. Like the emotional side, as far as like missing out on good setups. That's the main thing. Like missing out on trades or losing trades don't bother me anymore. Yeah, there's 2 winners right there, but it's just sometimes when I miss out on shit, it's like, fuck, like, but I really hope this helps, guys. Just wanted to give a little insight as far as what trade setups I like to look for, some that I try to be careful for, and just, yeah, stay tuned for the next videos. Make sure you leave a comment, and subscribe to the channel. I plan on keeping this up. I love this, and I hope you guys can enjoy this with me. Do well, be great, and live gratefully. LTJ, thank you.